How are we doing, everyone? Hope you're well and welcome back to the channel, and if you're new, welcome. So today I just want to make a quick video because it's absolutely boiling in my room, but I just want to make a video about how we can identify fresh key levels in the market to identify trading opportunities. So let's jump over to the charts, take a look at the two examples I got for you guys, one being the 30-minute time frame and the other being the 15-minute time frame. Okay, so taking a look at the first example on pound Australian dollar. So I like to find fresh key levels in the market. I like to look at the most recent price action to identify these levels to find trading opportunities. So what we can see here is that we can see a key level here. So what I like to do is I like to mark the most recent high key level, and how we're identifying this as a key level is because we can see one. You want to write this down, take note of it. So we can see wick rejections. So identifying key levels, the first thing you want to be looking for is wick rejections, okay? This is going to tell us that there is traders at this level and that there is liquidity being grabbed from this area in the market. The next thing you want to identify is strong impulsive candles moving away from this certain area. So what we can see is we can see that exactly from this candle here. And basically what this is telling us is this is basically telling us that there's traders at this key level, this key area in the market, as price has reacted from this level and pushed away from it impulsively. Again, simply just indicating to us that there is traders at this level. So two simple things: look for wick rejections and then look for impulsive candles to indicate to us that there has been traders at this level. The next level we're looking at is this major low in the market. And how and what we can do to use these key levels in the market, or when we've found these key levels, is we can use them to find trading opportunities. So what we can do is we can say, well, if price comes back to this key level, last time it came to this area, we had a strong impulsive push to the upside. So what we can tell ourselves is, okay, if price comes into this level and we start to see wick rejections and we start to then see bullish pressure on maybe the lower time frames, we could then use this key level to buy from. Or if we see price break through the level, we could then use it to tell us that, okay, we've broken the most previous low in the market that we've had here, this higher low. We've broken bullish sentiment or bullish structure. What we could then do is, if price is going to continue down, I'm not going to enter on the push phase. What I can then do is wait for price to pull back to this level again, because I know there's traders here, and then to decide how I want to trade. So let's just play it out to see how this one worked out. And okay, as we can see, price completely destroyed and went through the level. So now I'd be telling myself, okay, we've broke through this key level. Now I want to see a deep retracement, a deep pullback to this area, to this key level, to then look for a trading opportunity. So it's all about being patient. We've marked our levels, we've found our fresh key levels in the market. We're not looking too far back, we're not going all the way back here to mark levels, we're just looking at most recent price action. And we're also using these key levels to identify sentiment. We see that price has broken this higher low. This is then indicating to us that the sellers are taking control. We're waiting for price to pull back, and then we're waiting to identify wick rejections, which we can see here as part of looking for entries, but I'm not going to go into too much detail. And we can then see a momentum shifting candle, which is now telling us that price is now starting to push away from this level, and we can now potentially look for a trading opportunity. Okay, so taking a look at the last example, it's on pound US dollar on a 15-minute time frame, but what you guys got to remember is this remains throughout the same on every single time frame. It's going to take some time for you guys to identify, if you're new to trading, to identify these levels, but the more chart time you put in, the easier it will be to basically identify and pick out the finer detail key levels within the pair that you're trading. So initially, the first key level I'm seeing is obviously the key level high, and looking at this price action, we can see that we have a key level here as well, as this is a structural low where we have wick rejections and price actually moved away from it. It wasn't very strong, it wasn't impulsive, but this is like what I'm saying. I know that this is a key level due to experience in the market and just knowing how this pair moves. But simply sticking to my rules, what I've been telling you guys is we can see wick rejections at this area, and we can also see price moving away from it. So this is a key level structural low in the market. And of course, we've already broken this key level, but price has never pulled back. We know that here, as part of structure, just to throw it in there, we see that price has never made or has failed to make new highs as part of bullish structure. We then broke through this key level structural low. We can now use this as confluence to look for selling opportunities. But what we're going to do is we're going to use this key level this fresh key level in the market as well lines up with these wick rejections here. As price slightly pulled back, but it wasn't a deep retracement, okay? It wasn't enough for me to look for a trading opportunity. So what we're going to do now is we're going to wait patiently to identify price pulling back to this key level. Now, depending how price pulls back to your fresh key levels, this is how you will decide to look for trading opportunities. But if we know price is trending down, we're not making new bullish structure, we're going to have a bias of sales. We're going to be wanting to look for short positions. But how we're going to be using this key level is if we're going to tell ourselves is that if price does not break above this level, I'm then going to look for a selling opportunity. This is how I actually took my trade earlier on this pair. So we can see that price is failing to break back above. We can see again on the next candle, for now 2 15-minute candles for half an hour, price was failing to break back through this key level. We then want to identify momentum shifting candles, and once we see all our entry confirmations, we're seeing what we want to look for as part of our trading plan, we can take the entry. But what we've done is we've used key levels, fresh key levels in the market to identify trading opportunities and wait for price to come back to these levels to look for trades. Hope you guys enjoyed this one. Slightly quicker video, but it's still got lots of value in it. But like I said, just try and put as much time into the charts as you can. At first it's slightly hard to identify as key levels, but if you can remember my 2 rules that I told you about, just identifying wicks and identifying momentum or impulsive candles from the area, you're more than likely at a key level in the market. But if you guys did enjoy this one, I appreciate if you leave a thumbs up, leave me a comment so that I know you guys are enjoying it. But I hope you guys enjoy the rest of your week. Keep grinding, it's a new month, stay consistent, trust the process, and I'll see you lot on the next one.